Hey everyone, and welcome back to the channel. Get ready because today we're talking about a massive deal shaking up the world of artificial intelligence. A deal so big, it's worth nearly $20 billion and has sent one company's stock absolutely skyrocketing. We're diving into the latest blockbuster news from Microsoft. They've just signed an enormous contract with an AI infrastructure provider called Nebius. And trust me, this is a game changer for both companies and the entire AI industry. It proves, once again, that the demand for AI computing power is relentless, showing no signs of slowing down. So, what's the big news? Microsoft has struck a huge agreement with Nebius, potentially worth up to about $19 billion. This isn't a quick fix. It's a multi-year deal running all the way through 2031, where Nebius will provide Microsoft with dedicated AI cloud infrastructure. Imagine having your own super-powered computing facilities just for you. That's what Microsoft is getting here. Nebius is going to deliver dedicated graphics chip infrastructure capacity from a brand new data center in Vineland, New Jersey, starting later this year. These powerful graphics chips, or GPUs, are the engines that train and run today's most advanced AI models. This initial agreement is valued at around about $17 billion, but Microsoft has the option to buy even more services and capacity, which could push the total value to that incredible about $19 billion mark. The services will be rolled out in stages during this year and next year. Why is Microsoft doing this? Well, even with all their massive investments, Microsoft is facing a major shortage of capacity for its AI cloud services. Their chief financial officer admitted they expected to be short on computing power through the end of this year. The demand for cloud and AI services is just exploding, outpacing even their rapid expansion. This shortage has actually limited Microsoft's ability to develop its own AI products and offer its Azure AI services to customers. So, by partnering with Nebius, Microsoft is strengthening its ability to support its own innovations and also serve outside AI customers, including giants like OpenAI. This move also lets Microsoft reduce its reliance on existing hosting partners. Now, let's talk about Nebius. This company has a fascinating backstory. It was spun out of the Russian tech giant Yandex in early 2023, completely separating from its Russian operations and rebranding. Since then, it's been focused purely on global AI infrastructure backed by big investors like Nvidia in Excel. This rebrand marked its shift from search and consumer internet to high-level cloud computing for businesses. This Microsoft deal is its first long-term contract with a major tech company, and Nebius' CEO hinted that more deals like this are definitely on the way. The market's reaction to this news has been explosive. Nebius shares soared over 40% in pre-market trading and jumped almost 50% overnight. Before this announcement, the stock had already shot up over 130% this year, and over the past year, it's gained over 340%. This jump validates Nebius' strategy and its capabilities in the rapidly expanding AI infrastructure sector. Its total company value is now around about $15 billion, with a healthy profit margin of over 53% and almost 15 times more short-term assets than liabilities, meaning plenty of cash to grow. This huge deal also sent ripples through the rest of the AI infrastructure market. CoreWeave, another company in this space, saw its shares rise over 5% on the expectation that the AI cloud boom is far from slowing down. This is particularly interesting because Microsoft already gets extra graphics chip power from CoreWeave and had even signed deals for up to about $10 billion with them last year, though they later dropped an option for another about $12 billion in capacity. That capacity was then quickly grabbed by OpenAI instead. This shows just how intense the competition is for these essential AI computing resources. Indeed, the bigger picture here is the relentless demand for AI compute. Microsoft, for example, is spending unprecedented amounts of money to meet this demand. They revealed their AI spending would hit about $120 billion this year, up from about $88 billion last year, and almost 4 times their 2023 outlay of about $32 billion. These numbers are staggering. Some experts even predict Microsoft's spending on AI infrastructure could reach about $200 billion by 2028. Some analysts have pointed out that Microsoft turning to outside providers like Nebius and CoreWeave suggests a strategic shift. Instead of just pouring capital into building all their own data centers, they're increasingly relying on partners. This is a smart move when building costs are high and the need for immediate capacity is critical. One expert noted that this deal gives Nebius a big advantage in a world of graphics chip shortages, securing its place deeper in the AI supply chain just when scarcity makes prices go up. Let's not forget Nvidia's crucial role in all this. Nvidia, the biggest name in AI infrastructure, is essentially the main supplier for the unstoppable AI boom. Its total company value is over $4 trillion, a huge 12-fold increase in 5 years, driven by its unbeatable lead in graphics chips and massive demand for AI data centers. Nvidia's sales alone have grown from about $11 billion in 2020 to over about $130 billion by early 2025. Their H100 and H200 graphics chips are the go-to for training AI models for companies like OpenAI and Google. Nvidia isn't just selling chips. They're strategically investing in companies like Nebius and CoreWeave. Nvidia invested in Nebius's about $700 million funding round in December 2024 and now holds about 1.2 million shares, giving it about 0.5% ownership. This partnership gives Nebius a major advantage in getting graphics chip capacity, especially with AI demand growing incredibly fast. Nebius is using Nvidia's latest hardware, including powerful GB200 and GB300 systems in Europe, along with Nvidia's AI software. This combination makes it competitive for both startups and big tech companies. These investments ensure Nvidia's partners get first access to next-generation graphics chips, powerful software, and greater credibility in the industry. The financial health of Nebius is also looking strong. In the second quarter of 2025, they reported sales of over about $105 million, a massive 625% increase from last year, and a huge 106% surge from the previous quarter. They even reached positive operating results in their main business earlier than planned, showing their efficiency. This strong performance, combined with big investments from firms like Excel and Nvidia, means Nebius is smartly positioning itself as a neutral AI cloud option. This approach, offering shorter-term contracts and more control over customer data, especially appeals to startups and businesses worried about data ownership, setting it apart from bigger cloud providers who might compete with their own AI models. Nebius is also actively expanding its footprint globally. Besides the New Jersey facility, which has an initial capacity of about 300 megawatts and can expand by another 400 megawatts, they're deploying facilities in Kansas City, Missouri, Iceland, the UK, Israel, and Finland, where they're tripling existing capacity to about 75 megawatts. Looking ahead, Nebius expects its annual revenue growth rate to be about 50% from 2025 to 2030, with AI infrastructure bringing in almost 90% of its total money by 2030, reaching almost about $6 billion. The market's excitement about this Microsoft deal highlights Nebius's huge potential. This entire situation with Microsoft and Nebius really underscores that the AI gold rush is still very much on. Companies need vast amounts of computing power, and they're willing to pay top dollar to get it, whether from internal builds or strategic external partnerships. This ensures that the race for AI dominance continues at full speed. Well, that's the latest on this massive AI deal. What do you think about Microsoft's strategy, and how do you see the AI infrastructure market evolving? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button, subscribe to the channel for more market insights, and don't forget to ring that notification bell so you never miss an update. See you next time.